Alright, so I got asked an excellent question here recently regarding my goals and target points for PRCH Group and for SBB. On the surface, it's quite an easy question, but if we really drill down to it, it becomes a lot more difficult. So let's do that. Let's walk through the investment decision-making process together. On the tier 1, on the absolute most important level, we gotta look at lifestyle. What type of lifestyle are we trying to support? If you're younger like me, I'm choosing to go for excess returns because I want to be able to retire quickly. I don't want to wait until I'm 50. If you're 50 and you already have a ton of capital, you might be looking to preserve it. I know we have a lot of viewers here who are 50 and above from America, then maybe that's your goal. Or if you have a special situation, you might be, having a completely different goal. So that's tier 1. And then if we take a look at tier 2 below that, we gotta look at putting that excess capital to work. What type of goal here will fit the lifestyle? So getting richer quick? Well, then we gotta chase excess returns. Then we gotta look at companies with a lot more risk where we can get above market returns. And in this case, we have smaller companies such as, for example, PRCH Group and SBB. That is a good fit for me. Then on the third tier of the decision-making process, we have to look at numbers that matters for investors so that we can judge the health of the business. We can look at, for example, revenue growth. Is the company growing or declining? Are they getting more business? Is it double digit? Is it rapid? We've seen triple digit from, for example, Snowflake in some quarters. That was absolutely insane. That stock exploded during that period. And this is a good judgment of the future returns of the company, the future profitability. What can we expect? We use this in our models. We use this when we discount future cash flow. We put in that growth rate. We look at profitability. We look at margins over time. In my case, I like to make it simple. I like to try to understand the business, the potential, and I like to look at revenue growth, and I like to look at profitability. In the case for PRCH Group, I will look more at revenue growth and profitability indeed. I will also see a lot of other potential bullish triggers and goals. For example, remember when we took a look at the debt refinancing of PRCH Group many months ago? Well, then we saw that they had a clause in the agreement where they could exchange the debt for PRCH Group shares at $25 a share. I think that's a good maximum cap in terms of valuation for the company, and a point where I would have to look at the investment again and see, all right, is this potentially a time to sell? What's going on with the business? What's going on with the numbers? There's also risk that this company will get bought out. It's a lead generation machine. There are plenty of companies close to this vertical that could benefit from the data that they get from software inspections. For example, mortgage companies is a very close one in this case. So there are a lot of target points, a lot of goals in this case. And if we look at SBB in this case, that's a very interesting company. They were famous for paying huge dividends in the past, and the manager, the CEO, basically said, all right, we're gonna do this forever. We're gonna pay these big dividends. And we all know what happened after. They had to cut dividend. There's some financial trouble, but no, billion kroner company, quite a larger company in the property sector in Sweden. But in this case, we have to look at going principle. We have to look at long-term versus short-term debt on the balance sheet. We found this. We took a look at it in the last analysis of SBB together. And in that case, we have to see, all right, will this company likely survive? And could they potentially continue to pay out big dividends in the future? One example here would be to take a look at Swedbank, a Swedish bank. In the middle of the financial crisis of 2008, stocks was trading at about 14 kroner a share at the lowest point. And a few years ago, they paid dividend of 19 kroner a share. So you would get back more than your total invested capital just on a year on dividend. And that's the type of financial gains that we could potentially get from taking excess risk. So that's why I have it as a goal. I want to get to a good, comfortable position quicker. I chase that excess return, and that's reflected in my goals. These goals, nobody can tell them to us. We have to find them within, we have to think about them, and we have to structure our choices based on it. So it's a very difficult question regarding goals and target points that we have for stocks when we really drill down into it. I hope it made a lot of sense, and as always, I hope you guys make a ton of money, whatever investments you decide to make. Take care now. Bye bye.